The stock market versus property versus putting your money in the bank. What should you do? Well, I'll probably be able to tell you a little bit about this because I'm a trader and an investor who's been doing this for about a trillion years or something like that. Perhaps, just maybe, I'll be able to help you with this and I'll be able to show you some of the interesting differences between investing in property or investing in a stock market, or just putting your money in the bank, for heaven's sakes. By no means is this financial advice. I am not giving you financial advice. I've done the property thing, I've done the investing thing, I've done the trading thing, and I've used the banks as well. And the result is quite simple, to be quite honest with you. And that is, when you think about property investing, when you think about investing in a property, it's very, very attractive. It's something that you might want to do. It's something that you think, well, if I invest in a property over all these years, somewhere down the line, that property is going to go up in value and it's going to bring me something back. Now, here's the thing to understand about property. The first property you buy might be your home. You can't really consider your home an investment because your home, at the end of the day, if you sell it, you've got to replace it, sort of. Otherwise, you're going to live in a caravan or a tent, something like that. Really important to understand that your home is not an investment. It's an investment to you in the sense of it'll be paid off and you won't have to pay for something and you'll own it and you'll be able to live in it, bearing in mind that you still have maintenance costs and rates and taxes and all those sorts of things that go on with owning a home. The second and third properties, those are the ones that you're looking at and thinking, well, I can make some money out of this. Maybe I can rent them out, maybe I can Airbnb them or something to that effect. And I can go into the market and I can pay these things off and they'll be worth something to me over time in the long run. Now, here's the difference between investing and actually owning the extra properties which you're expecting to bring you income. The best way to invest in property is if you buy it and you're able to somehow lease it out, rent it out, and get something back for it. Because then those bond costs aren't sort of affecting you in a big way. But just remember that specifically in the beginning, you're not going to get more in rentals than you are for what you're paying back on your loan for the property. Let's say if you loaned money against the property. But let's say you used cash. Even if you used cash, you would have put that cash in the bank and you would have got some kind of interest back from it. So you've got to offset that difference in the finances. Now, there's nothing wrong with investing in property. It's not the worst investment in the world. It is something that you can look at and something that you can do. But my personal opinion is, if I look at the whole scenario, that investing in the stock market or investing in an index or the stocks is probably better over the long term. You can see that if you look at this investment calculator that I've got here. Let me show you this. Let me show you how this works. Look, if you take an investment, now, all you're going to do is have let's say you want to put a 10% deposit down. Let's say that deposit, okay, I'm going to use dollars, all right, but I'm going to work it in rands to make it a little bit more interesting. So a 4 million rand house would have a 400,000 deposit. And then you're going to have a period of, sometimes you can have a 30-year bond. So we're going to put it at 30 years. The interest rate, we're going to have a return rate of 20% because that's what you're going to make on the stock market. Additional contribution, that's going to cost you. Okay, you've put the deposit down, so the deposit's paid, but this would cost you $4,000 a month. And let's say 20, 30 years, let's calculate how much that would give you at the end. Ooh, look at that figure, 156,710,026. You would have invested 1.1 million, or no, yeah. No, sorry, 14,400,000. You've invested 14 million, you've made 156 million over 30 years. That's investing in the stock market. Now, let me show you real estate. Investment property calculator. I'm not even going to calculate this. Look at this. Purchase price, down payment, loan term, interest rate, payment type, closing costs, gross income, vacancy rate, number of units, accounting, admin, legal charges, advertising, electricity, elevator, gas, landscaping, legal, maintenance and repair, payroll, taxes, permanent license, pest control, pool. I forgot to mention that you're going to have to pay tax when you get a rental income, and then pool, property insurance, property management, real estate taxes, security supplies, telephone, tenant buyout, trash, water, other. My goodness, guys, that's the difference. If you invest in the stock market and you invest in property, it's two completely different pictures here. There's so many costs involved in property, and there's so much work and so much maintenance involved. Investing in the stock market is simply just put your money in there and see what happens. So now, let's say you were going to have a rental income, guys. You were going to get most of this money back. You're only going to invest, let's say, actually, this should have been 40,000 because I was working it in rand, so it should have been that. It should have been 40,000. It's wow. Okay, that makes a slight difference, guys. So you spent 14 million and you've made 712,545,533 rand. Okay, that would have been in rands. Okay, not dollars. I'm just using a rand figure because I understand rands better than dollars. You can just take a zero off here, or divide it by 2, or whatever the case. Take a zero off and divide it by 2, and then you come to dollars. But actually, it's 10 to 1, not 20 to 1, as they say it is. But if you look at this is how much you get back. I doubt very much whether your house is going to be worth that in 30 years' time. I really doubt it. I really, really doubt it. But let's say that you had a tenant that was paying you 25,000, so you could only invest 15,000 back. 15,000 you can invest back. So there you get it. 326,548,653 is what you will have in 30 years' time. I guarantee you your house is not going to be that amount when you get to it in 30 years' time. Now, let's say you have a 20-year bond, because most of you will give me trouble and say, but I've only got a 20-year bond. Okay, so there's a 20-year calculation. On the same calculation, you'll still have 51,917,885, as well as your total contributions would only be 3.6 million. And you would have contributed 14 million towards your house, or 15 million towards your house. So, big difference, total difference. At the end of the day, do be aware that you can make a lot more money on the stocks. You see, it kind of takes you to a different level, because now instead of paying a bond down and giving them all the interest, you're paying something up and you getting the interest in. So you're making the money on your investment. Look, on average, a property in the USA, for example, in a good area or decent area, I'm not saying the best, I'm not saying the worst. So on average, I would say at this time in 2025, you're probably looking to pay around $400,000 for a house, maybe more, maybe less. And if you're in South Africa, you're probably looking at about 4 million rand or 5 million rand. So property is probably a little bit higher in the US, but I'm just relating it to a bond repayment. If you have a loan on a property of 4 million rand, you're going to have to pay in the region of around 40,000 rand a month back. That equates to about $2,000 a month. If you're investing that kind of money over a period of 20 to 30 years, because that's how long it takes you to pay a bond off, you're going to create a vast sum of money in those investments. Whereas if you're paying that sum of money towards a property repayment, because that's how long it takes to pay it off, all you're going to have is the property value at that point in time. And if you equate the two, your property that you own, that you paid 4 million rand for today, would be worth 4 million rand on the equivalent at that time. Effectively, if your money has gone up at 10% per annum and so on and so on and so on, I'm just going to pull a figure out of my hat and say, let's say it's worth 15 million in 20 years' time. Your investment will be worth that much more, because you would have paid that much less in and you would have made that much more money back. Look at it this way. When you pay a property back over 20 years, you've got to pay interest into that account. So you would have paid a lot more than 4 million rand. You would have paid 8, 9, 10 million rand for that house in interest, whereas you would have invested just a few $100,000 to make millions on the stock market investment. Now, the other thing you've got to look at if you've got a property. Now, here's the interesting one. And believe me, guys, I've been in the property, I know. When you buy the property for 4 million rand, you've got to at least have 1 million rand to spare. Because, and you can equate this back to dollars as well, it'll probably be very similar in anywhere else in the world. But I'm coming at it a perspective from a South African perspective, right? You've got to have a 10% deposit, which is at least a 10% deposit. In most cases, 20% because the amount's too high for the bank. But let's say you only need 10% deposit. Let's say you only need 10%. It's 400,000. You need 20%, you need 800,000. And then you've got transfer duty and lawyers' fees to purchase the property. So this now costs you another 350 to 400,000 rand just purchasing. So now you're on 800,000 just for the 10% deposit and the purchase fee. And now you haven't looked at any things that you need to do to the property when you move in. So now you spent all this money before you've even started. The other thing you have to look at is over the period of those 20 years, what kind of maintenance costs are you going to incur? Because surely, even though you might be getting some rentals in, or you might be Airbnb the property, or it might be whatever else, you've got rates and taxes to pay every month, which are based on the value of the property. That's got to be paid. The electricity might get paid by people that are renting, but if you don't have a tenant at any one particular time, you're going to have to pay those costs. And all maintenance costs on the property are for your account over the next 20 years. You're painted, you're going to have to do driveways, you're going to have to keep the gardens maintained. And every time a tenant leaves, they're going to leave the house in shreds, and you're going to have to fix that up as well. Any electrical costs, plumbing costs, any excess things that happen to the property, insurance on the property that has to be paid. All of those costs that you're putting in to looking after that property for 20 years to make you some money back over time, on the market, you don't have to pay any of those costs. But you're going to say to me, yeah, but Rob, over time, I'll be getting that rental income and I'll be much better off because I'll have all these properties and I'll be getting all that income in. Yeah, I hear you, and you're on the right track. But just remember, in the stock market, you get a very similar situation where stocks that are not growth stocks anymore, that have now grown to their limits, will start paying you dividends on an annual basis. And those dividends can sometimes amount to 6, 7, 8% on a good company, which you're getting back on your money for nothing. Yet the stocks are still growing. You've got no costs, no anything. And this just grows and it just gets bigger and bigger and bigger. My opinion is if you've got the spare money to spare, my opinion would be to rather put it in stocks, because investments work like this. You choose 4, 5, 6, 7, 8, 9, 10 stocks, depending on how much income, how much money you have available. It always depends on how much money you've got available at the end of the day. I mean, come on, let's be honest. You can't just suck money out of the sky. Start with 1 or 2. Maybe you've got a lump sum amount to start with. I mean, if you were going to buy a home or a house or a property, surely you've got some form of lump sum available that you can put in. Then take that amount and build it up over time. Don't look at the stocks. Don't look at the charts. Don't look at them going up and down. Don't worry about that sort of thing. It's set and forget. Buy it and keep it for 30 years and keep adding to it on a monthly basis. Just keep on adding to it. So if you were going to pay an extra 2,000 a month for another property, or extra 20,000 a month for another property, just keep adding it into stocks. Just keep adding it in there, and it'll bring you the income that you want at the end of the day. Not that difficult, not that stringent. Or let's say, I'll just give you another scenario. Let's say you were going to pay 30,000 Rand a month for a property that you were going to have a bond on, and you were going to get a tenant that was going to give you 20,000 Rand a month back on today's terms. So that gives you a difference of 10,000 that you would have had to pay in any event for the ownership of that investment. Take that 10,000, start paying it into the investment, not the 30, just the 10, and you'll still make more money than you would have if you just had the property. The big thing to remember is you do have to buy a home. Don't rent. Don't be renting. Buy your own home. Buying your own home is super important, and I'll tell you why. And in the long run, if you don't buy your own home and you're renting, rents go up on an annual basis. They keep on going up, up, and up, and up. In 20 years' time, if you're paying 20,000 Rand a month today, in 20 years' time, you're going to be paying 200,000 Rand a month based on inflation. And you're still going to be forking out every month and having to go to work to pay the rent. Whereas if you buy and you have a bond on your property and you start paying 20 or 30,000 Rand a month today, you'll still be paying the exact same amount in 20 or 30 years' time when your bond's getting paid off. And it'll be like paying 2,000 Rand a month today. It'll be nothing in comparison or by comparison. It'll be absolutely nothing to you. It'll mean meaningless to you. And that's where the difference comes in. The difference comes in simply by looking at over a period of time. And you've always got to look at what's it going to be like in 20 years' time, 30 years' time? What's inflation going to be like? How much is that money actually going to be worth when I get to that point? Because there's so many guys out there that'll come and sell you a pension insurance policy. And I'll be like, you got to buy this off me, because if you pay 20 Rand a month today, in 30 years' time, it's going to be worth 20 million, but it's only going to be worth 20 Rand, actually, because the inflation would have taken it over. Be very careful of that scenario. Be very careful of how that pays out or plays out for you. Very important, always buy a home. Now, I'm not adverse to investing in property. I do like investing in property. I do believe it's a good thing, but it is different to investing in stocks. And if you're looking for the better investment, I would say that stocks are the better investment over time, over the 20 or 30 years, because they're going to give you more back and you're going to get more value out of it. Yeah, if you're looking for that great Airbnb income or that great sort of tenant income and you want to own a whole bunch of properties, then yeah, property is not a bad investment. It's not the worst investment on earth. Nobody's ever gone broke owning loads of property, let me put it that way. But people have gone broke trying to invest in the stock market. So yeah, do be careful on that sense. But by the same token, if you just sit and forget and you just invest in the markets, over time, it just grows to a gargantuan amount of money. Never mentioned the bank accounts, did I? Look, if you have a fixed deposit and you put money in a fixed deposit, they'll offer you a percentage. Let's say it's 10% per annum. And they'll say, we're going to give you this 10% every year. And it's really good. I mean, over a period of 20, 30 years, that's really good. You're going to get that money back. But inflation's going up at 3 to 6% per annum. So you're not making that much of a profit on it at the end of the day, if you think about it. But if you invest in stocks and you put it in the stock market and you keep on adding to it every month, you're probably going to make a gain over time on average of over 20% per annum, 25% per annum on good stocks. You're going to do much better than the bank. Even if it's only 15%, you're doing better than the 10% that the bank's giving to you. Let's think of it this way. Why is the bank giving you 10%? Why is the bank giving you 10%? Because they're making 25, 20%. Because they're doing exactly what you should be doing. They're taking the money and they're putting it into investments. And those investments are making far more with your money than you are. So that's how they can afford to give you that. Look, a lot of that investment is also with them giving out loans and credit cards and things. Banks make money. But by the same token, they'll invest it in investments, which you should be doing. And that's where you'll make most of your profit back. I would say the best investment is stocks. The second best investment is property, and the third best would be putting it in the bank. By no means is this financial advice. I am not giving you financial advice. This is just what I would do and how I would handle the finances in the markets. Some of you will agree, some of you will disagree. As I told you, I'm a trader, been doing this for 1 trillion years. And if you want to know more about trading, and if you want to know how to trade price action, go and check out my last videos here. They'll tell you all about it. Guys, thanks so much for watching. Till the next video. Cheers, ciao, and bye.